Wow, Warren Buffett rarely sells any business. In fact, the last time he sold a business, it was a newspaper business in 2020 and a workers' comp business in 2019. That's it. He rarely sells a business. Well, recently, he's starting to consider selling, per talks reported by the Wall Street Journal, Berkshire Hathaway Home Services, the real estate brokerage. Yeah, that actually used to be called Prudential Realty, and then Berkshire Hathaway acquired them, and then real estate agents across the country had to start, instead of typing in Prudential, typing in Berkshire Hathaway Home Services California Properties, as an example. It is the craziest naming convention that they had for this business. But anyway, so Berkshire Hathaway bought the brokerage business, which was a brilliant move because we've seen volumes for real estate sales explode, especially after the pandemic. Zero interest rate policies really contributed to this speculative boom in Airbnbs, vacation rentals, and property ownership without regard for valuation, especially market dynamics and how easy it is to build in some areas versus other areas. We'll talk about that in just a moment. But this is a very interesting shift for Buffett because he does not like selling property or companies. He generally doesn't sell. He's a buy and hodler. Buffett, being 94 years old, has got a lot of experience in the business world, and a lot of people are wondering, why would he be selling? In fact, so much so that you've got Barron's suggesting Buffett hates selling anything. The sale of Berkshire's real estate unit would be unusual. So what I've found with Buffett is he usually doesn't like companies that are expensive now, but have a declining trajectory. And of course, this leads a lot of folks looking for cheaper home prices to say, oh my gosh, does this mean a real estate crash is coming? We'll talk about that in a moment. But there is a type of real estate crash that has already been happening, and it is a crash in something that's very, very important for real estate agents: volumes. This is, by the way, the same thing that happened in the early 1980s. I wish this chart would go back further. I really do. But what happened in the 1980s, and I'll show you this in just a moment, what happened in the 1980s is you had this really high inflation going into the 80s, and then you had the double recession of 80 and 82 as the Federal Reserve tried to fight to get inflation down, and it took until 1985 for inflation to finally be under control, and we were able to boom for about 4 to 6 years, depending on if you want to count the stock market crash that happened in 89 briefly, or the overall recession that we had in 91. And then, of course, you had another 9+ year boom until the dot-com bubble. So ups and downs in markets are very, very typical. But what happened in the early 80s was actually not a real estate crash that is in sales prices. You did have a savings and loan crisis at the end of the decade, but not at the beginning of the decade, which is most similar to the high interest rates we're facing right now. Take a look at this chart. You had a volume collapse, and again, you could really only see here, I really wish I could show you the 70s because I'm convinced it would be higher. But anyway, you had some of the lowest turnover of real estate ever on this chart. Just under 2 million homes turned of existing homes in the United States. You could see here during the pandemic era, we were sitting at about 6 million homes of turnover, which was the highest we had seen since the 2005 speculative home buying frenzy of ninja, no income, no job, no asset loans, speculative, negative interest rate loans. Don't worry, marry the house, date the mortgage, you could always refinance. All of those were just sleazy sales lines to get you to sucker up to debt and suffer through a crash, which ended up in, massive foreclosures and short sales and a complete disaster. 2007 has the opposite of characteristics that we have today. Today, we have high interest rates just like we did in the 80s. So history tells us that this time is not different, that we have similar loans, like quality lending like we had in the 70s and early 80s, just like we do today with qualified mortgages. And we have a high interest rate environment depressing sales volumes, which is literally the opposite of what we had over here in 2005, or you could even say in 2021, but not as bad because we still had qualified mortgages here. But in 2004 and 5, anybody could get a mortgage with a pulse. There were no underwriting standards. Fannie, Freddie Mae, Ginnie Mae, FHA loans, they got pushed aside in favor of or I should say commercial loans that anybody could get their hands on, private loans basically, corporate loans. What I'm making a difference here between is today, most people, when they get a 30-year fixed rate mortgage, they're getting a conventional style loan that's to some degree backed by the United States government via Fannie Mae, Freddie Mac, whatever. In 2004 and 5, if you study a history of the cycle, you find that they actually got pushed out of the way in favor of just companies saying, we'll lend you with whatever terms you want. Well, that led to, obviously, an insane bubble and a crash, no surprise. So really, history here shows us that volumes plummeted during the 80-82 era, and that same real estate crash is actually taking place right now. It is a volume crash. It is not a price crash. Now, a lot of folks are like, oh, well, it's just a matter of time for home prices to fall. Well, home prices have already corrected in some areas. If you look at the nation overall, you'll actually see that home prices are up 3% year over year compared to 24, and they're higher than they were in 23 and 24. And many of you who've been following me for a while, you already know this. There are certain markets like Tampa, different parts of Florida, Austin, Texas is a great example, where they actually had such a big bubble in 2022 that home prices are negative for each of the last 3 years year over year. Now, we've been talking about that on this channel. We saw this coming as early as 2022 because we were visiting these markets and we were seeing what was happening on the ground. The exact opposite is happening in areas like San Diego, where our company has a lot of exposure to real estate. But you can see you've got this increasing value of real estate year over year after year. Now, one of the reasons for this is California has crazy policies that make it impossible to build homes, which does the opposite of create affordable housing. Whereas Austin, Texas, more Republican, more freedom. You can build as much as you want, basically. Okay, well, that led to an oversupply of housing. So let's get to Buffett. What is this signal that Buffett is selling us? Well, I think Buffett is reacting to this. Real estate agents, and therefore real estate brokerages, make money off of what? They make money off of volume. So real estate brokerages get really, really popular when volumes are popping off. In fact, we just saw Redfin enter into a tentative agreement to get acquired by Rocket Mortgage, which, mind you, I think is an absolutely brilliant move. These right here, the financials that we have right here, this is the Redfin Corporation right here. Redfin has incredible market share when it comes to app data, like people wanting to go onto Redfin to look at homes, to view homes. They're really, really good. They're not people's favorite in the real estate community because people see Redfin agents as undercutting traditional real estate agents. So think of agents who work for, let's say, Berkshire Hathaway, California Home Services, or whatever state, as getting undercut by Redfin, often salaried agents who work with a totally different business model than the traditional business model of a real estate agent who's an independent contractor. So Redfin has sort of been the bane of real estate agents as a competitor. But a lot of real estate agents also have had a hard time establishing relationships with a company like Rocket Mortgage, because Rocket Mortgage doesn't typically give you one traditional lender you work with. Instead, you kind of get this assembly line of many different operators within the company, and they argue they have a very efficient process, but you don't have that relationship. Real estate agents are very relationship-based. So they like their lender, they like their escrow company, their title company. Redfin's come in and turned this upside down by saying, now we're just going to pay a salary to our agents and a bonus. And, on the other side, we're going to, then you've got Rocket Mortgage who's like, nah, you don't need a relationship with a lender. This person's really good at pre-qualifications letters. This person's really good at the first 17 days, getting the appraisal and condo certs. This person's really good at closing. And they've kind of specialized their lenders. So this idea of Rocket Mortgage and Redfin combining is kind of brilliant. And I think it's going to be a massive powerhouse. And I think there's a huge opportunity in owning Rocket Mortgage stock. In fairness, I have some exposure to it, but I have exposure because I think this is an incredibly smart acquisition. And I actually think that this sort of does well as the market slows down and interest rates potentially come down, because you'll see more refinancing in both Rocket Mortgage and Redfin, or have lending businesses, except now you're merging those lending businesses with the power of the Redfin app, which is almost ubiquitous for home hunting. And I would imagine you could make it really easy to just use the Redfin app to apply for a mortgage in the future. Do it all through the app. To me, it's a brilliant acquisition. But Berkshire Hathaway, going back to this, Berkshire Hathaway is operating a traditional model. They're operating a traditional real estate brokerage model that's been getting disrupted in part by companies like Redfin or Rocket Mortgage, but also by companies that offer real estate agents like eXp Realty a 100% commission after a certain cap out, essentially, that they've paid to the broker. And so margins at real estate brokerages have been coming under pressure from some of these more fintechy real estate companies, Redfin, EXPI, whatever. Maybe some would even say Compass, though Compass is a little different as well. And so Compass is now interested in potentially buying and acquiring Berkshire Hathaway because this traditional model of selling real estate, I think, is not only getting disrupted by the EXPIs and the Redfins and the Rockets of the world, but also by this, volumes plummeting. And as these volumes continue to plummet, it becomes more difficult for these traditional businesses to make money. And I think that's why you're seeing a potential acquisition of Compass to buy the real estate brokerage, Berkshire Hathaway Home Services of America. So to me, this is a signal of Buffett saying we have a legacy business that's being innovated and we're just not capable of catching with that innovation. And we're also on a timing basis, potentially getting into a worse environment. Because see, people argue that home sales are going to rebound as interest rates come down, but that's not necessarily the case. Because if interest rates plummet to zero, it probably means we're in a deep doo-doo recession. Well, look what happened after 2005. Home values did get hit in 2005 because this was a real estate-led crisis, whereas now we might have a more political and Wall Street-style crisis, stock valuations. But either way, in a recession, volumes tend to go down. So volumes might actually just be at the beginning of their trend. We might actually see home volumes go from this 3.4 million level down to 2 again, just like we saw in the 80s. I always like to say this time is not different. Now, I do think that some areas are still going to come under price pressure, but I actually think areas like Austin or parts of Florida might end up having a buy the dip opportunity in this next recession and crisis. So it's going to be something to pay attention to, and I love the idea of buying a good deal. I actually think Buffett is trying to get out closer to the top on private equity valuations. I think Rocket Mortgage is getting a scream of a deal on Redfin because Redfin stock has been absolutely getting destroyed. And I actually think Rocket's getting a steal over here. I mean, Rocket Mortgage has been getting destroyed as well. But I mean, look at this chart. Redfin stock went all the way to $96 during the peak of the home boom. And now it's at $10. And the only reason it's at $10 is because we bumped up from $5.82 because of the acquisition news. This was like a $700 million company. It's trending towards BK. I mean, it wasn't actually going to go bankrupt. The earnings of the company, yes, they were losing money. They had plenty of assets to offset this. But yeah, I mean, Redfin was a money-losing business. And at the moment, Rocket Mortgage is also losing a little bit of money. They usually do quite well in recovery. So just watch that. This real estate sector is full of hot potatoes right now. And so you want to be cautious in your investments in terms of what you're looking for. If you're looking at mortgage companies, understand they're a little funky to really fundamentally analyze. That's because they have two things. They have mortgages that they hold and mortgage servicing rights. Okay. Usually mortgages, when rates come down, go up in value. But you risk losing some of those mortgages to refinances, which means your mortgage servicing rights go down, which is your ability to earn a fee for collecting that payment every month. The upside of a company like Redfin or Rocket Mortgage is that they hope to capture that refinancing activity. Currently, Rocket's got about a 12% market share. I think through this acquisition, they could probably increase that. So just understand the dynamics that right now, really unpopular to own real estate companies because volumes are low. It's hard to do loans. So a lot of these companies are trading at a discount. And that's why I think Compass is coming in, buying this company or trying to buy Berkshire at a discount from Warren Buffett. And Buffett's looking at the trajectory going, we can't innovate with this and volumes are likely to plummet more. Let's just get out. We're just burning money at this point. Kind of smart. And it lets Buffett raise even more cash for, I think, what he sees as more opportunities in the industry coming to really buy the dip in a lot of companies over time, especially if we do end up walking into a recession. Basically, timed selling a good chunk of Apple at the peak, so we'll see where he goes. But when Warren does something, I like to pay attention, and I like to understand what's going on. So anyway, thanks for watching. If you like this insight, feel free to subscribe. I'll keep you updated with more real estate insights and do my best to give you a realistic analysis of what's going on. I know I could be walking around Texas or Florida right now just saying, the whole real estate economy's crashing, but we're niche to those particular overbuilt markets and areas that are now, to some extent, actually seeing population decline, which is quite interesting for Texas or Florida. It's almost the opposite of what you saw during COVID, but that's a normalizing. It's not uncommon. Anyway, thanks so much for watching. See you in the next one. Goodbye. Good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.